morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Wednesday, July 30th. Quiet trade across the ag space overnight as we get a little closer to the pause. However, we are starting to back up a little bit, particularly in the beans and in the wheat. Down 2 to 3 right now in the beans, 3 to 4 in the wheat. Pretty much steady in the corn. Same with the soybean meal, backing up a little bit in the bean oil, down 30 to 40 points. Speculators just continue to pile in the short side of the corn market as production prospects both here and in Brazil continue to grow. We had fun selling another 11,000 contracts yesterday, taking that short position back up to about 200,000 contracts. Open interest did surge over 28,000, so we're likely seeing some producer selling as well as U.S. farmers gear up for this year's harvest, while the harvest of the second crop in Brazil is getting to advanced stages and storage is becoming increasingly tight. We had speculators, modest sellers in beans, meal, and in wheat, while buying about 5,000 contracts in bean oil, stretching product value out in the bean oil out to a modern-day high at 52.4% with yesterday's close. Spot crush margins did push out to $2.27 a bushel, that now being the highest in almost 2 years. The Federal Reserve does end their two-day FOMC meeting today. No change is expected in the Fed funds rate range from 4.25% to 4.5%. We'll see if President Trump keeps his pressure on the Federal Reserve Chair Powell to lower interest rates immediately. We'll also see if President Trump looks to extend the current tariff truce with China for another 90 days following the negotiations this week in Sweden. U.S. weather remains mostly favorable as the U.S. Midwest is starting to see some relief from the recent heat and humidity. Above normal temperatures do reemerge in these week 2 of the outlook across much of the nation's midsection. However, precipitation looks to hold at normal to above normal readings. Several key demand figures come out the balance of this week, starting today with the EIA report on weekly ethanol production. Production last week is expected to have risen to, the average guess is 319 million gallons, up from 317 the previous week, and just ahead of the pace needed to hit the USDA corn usage estimate. Tomorrow we have export sales along with the EIA report on biodiesel and renewable diesel production capacity and feedstock usage. And then after the close on Friday, we get our monthly census crush and grain crush, that from the month of June. Inside trade for corn overnight. September corn did close below 390 yesterday, marking the lowest trade in the spot contract since last September. The SEP-D spread has widened out to a 22-cent carry as supply pressures build. For now, December corn has been holding support above its contract low at 407.5. Inside trade for August and November beans. Overnight, August did trade down to its lowest level since December yesterday, ahead of first notice date tomorrow. November beans continue to hold support above its July low at 998.25. And for now, September bean oil, August bean oil did reject trade up to that 58 cent per pound level before setting up a little bit of a retracement here this morning. Inside trade for Kansas City and Chicago wheat overnight, while spot Minneapolis carved out a new contract low for a 6th consecutive session. South Econ today raised their Russian wheat export forecast 5 million metric tons to 43.3. However, they're still below the USDA estimate at 46 million metric tons. Also, President Trump has threatened to impose additional tariffs and other measures against Russia if they do not start to show an increased effort to end the war with Ukraine within the next 10 days. Thanks for listening, everyone, and have a great day.